What is up, party people? Merry Christmas to everyone. Hope everybody had a good weekend. Merry Christmas. Jill, Bulk, what's up? Let's go. I already got some requests happening. Man, you guys are quick. So it's Monday, Christmas week. Who's trading? Are we trading? It's a little wishy-washy. Man, was a crazy week last week too. So let's get into this. I'm going to make this kind of short. We'll see. I'm interested in the market. I'm interested. I'm not like ultra excited, but today I want to go through a couple things. And while we bounce a little bit here, the market does look choppy. I will see. Merry Christmas. And we're going to talk about, what do we want to talk about today, guys? I think we should talk about the Santa Claus rally, right? And a little bit about this other thing called tax loss harvesting. Does everybody know what this is? You guys heard about this? By the way, we got a little over 100 people in here. Can we get a couple retweets on that post, or like comments, likes on the channel? That would help a little bit. Let me see. I'm looking. I got this new setup. I'm thinking the next time you guys see me, I may be in the other studio. Interesting. So this whole background is going away. Most likely. We'll see. Tax loss this year. No tax loss this year. Well, I mean, maybe if you owned AMD, or if you owned Celsius at the highs, or if you bought some things a little high, like IWM, you might be able to harvest some of those harvest some of those losses. But the whole thing about tax loss harvesting, do you guys understand the whole? Yes, Victor. Yeah, CELH. I mean, yeah, that's a good one. That's a good one for sure. It's a funky setup. So before I get into that though, you guys, let's do this. Let's kick this off. And again, if you're new to the stream, or if you're not familiar with this, what we do every Monday, even though it's a short week this week, as long as Monday is open, I am here. Oh yeah, Intel. That's a good one. That's a good one for sure. As long as Monday's open, we will do the stream. And what we're going to do basically is just kind of like highlight some of the major things that happened last week. I think next week I may have Lux come in. Maybe they'll sponsor the show and do a little bit of their, let me see if I can pull it. They've been doing this weekly recap for Event Catalysts. So that's interesting. And I'm trying to pull their post, but I can't find it. Well, no big deal. Oh, yeah, I found it. All right. There's nothing this week's U.S. energy inventories Thursday. Look at this. Oh, yeah, there's absolutely nothing this week. Monday, yeah, Japan. Tomorrow is a half day, by the way. Okay, Thursday. Thursday is this thing called Boxing Day? Wild. Yeah, I think, and we're going to get into this for sure, Slim. So anyways, this is what happened last week. So last week we had FOMC, right? And I posted on Twitter, or X, if you don't know, that the market was priced in for 2 to 3 rate cuts in 2025. The big shocking, was that when the announcement came out, it wasn't even the speech. It was like the press release. When the press release came out, it was very clearly that it's going to be 2. So CPI we got early, 2.7. That was fine. It was a nothing burger. Then we got this FOMC, and JPAL comes out, and immediately they changed the rate cuts in 2025 from a 4 estimate on their dot plot to 2, which the market wasn't exactly priced for. It was priced for about 3. It was priced for a hawkish cut, by the way, which meant that the market was expecting to get a 25 basis point cut that day, which we did, and then for January to be a pause, which for all intents and purposes, that's exactly what we're seeing. and that's based on the PCE, or the consumer price, the consumer personal consumption expenditures, what people are actually spending, right? And so the issue was really in the commentary. It would have, after the press releaser, it would have had to have been a dovish cut, right? And he came out a little bit more hawkish than the market expected. And definitely a little bit more than the market was priced for. And that's exactly why we saw what we saw, right? And so from here, what I would say is that it's the market's going to be in digestion mode, and not tomorrow, but Thursday when we come back, right? So we're closed on Wednesday. We get a half day tomorrow. Thursday is technically the beginning of this quote unquote Santa Claus rally. And we're going to go through that just a little bit. A couple of things. So inflation, JPAL's noting, still an issue, which we know that's, again, based on how much the consumers are spending. There was a dissension in the ranks, meaning that not everybody agreed for the two rate cuts for 2025. So it may kind of get washed out, right? What's true is that the market wasn't priced for just two. It was priced for a little bit more. And so we got a correction. And whether or not that correction is overdone, I think is what the market's deciding right now. And it was kind of interesting to see, right away Friday, we get PCE, which I just said, it was all about consumer spending and personal consumption expenditures. That is the Fed's favorite gauge. And now you kind of know why. And that actually, they had adjusted the estimates slightly just coming into it. And on Friday, when we did get the PCE number, it was slightly cooler than the market expected. So we got a little bit of a bounce immediately on Friday. So where does that leave us, right? So I think that leaves us exactly in between Friday and the FOMC day. So hopefully those are the lows, because it's not like we're gonna. So if the market moves to basically price out all rate cuts for 2025, I'd say that's a screaming buy, right? At some point, that'd be a screaming buy, because they're gonna cut. It's just how much, right? The other issue is just like, hey, look, it's the what part of 2025, and I think that's going to be what we're kind of toying with next year. In terms of what's going on in the markets, look, the Dow has been absolutely shellacked, right? What if the two cuts are 0.5%? Yeah, I mean, what if it's one cut at 50 basis points, and that's exactly what we're priced for. So right now, the Fed funds rate is at 4.5, which is, and the commentary is like, this is like reasonably restrictive, because if you think about the Fed funds rate, so first of all, this is the Fed only does the 2-year Fed funds rate, and they don't do like TLT or the long bond or anything like that. That's all based on the market. And restrictive is, so let's define so neutral, right? There's a Fed neutral rate, if you guys remember. So CPI is the inflation rate, and that's at 3.3 at the core, right? So if the Fed funds rate was 3.3% right now, that would be exactly neutral. And so, but because we're sitting at 4.5 and the actual inflation rate is 3.3, or call it 3, we are restrictive. And that's where he's thinking, like, we are sufficiently restrictive, but inflation is still an issue. So what they're looking for is for really this PCE to come in cooler and cooler. And I think, this last one is, or this next one's going to capture kind of holiday season. So it may be a little bit for that to cool down, which sets us up for an okay Q1. Maybe not crazy. What's up, Em? And yeah, you know the markets are really bad when AMD is running, and AMD was running today. I haven't looked at it just yet. We could look at it in a second. It's an interesting one for sure. But I don't get the whole AMD thing, right? Like, would I rather Nvidia here at like 40 at like a 40 PE, or AMD at like a 95 plus PE? And I mean, that's just me. I would definitively rather Nvidia at this price earnings versus AMD at the current one. That's crazy, right? Although people may think, oh, it's a good price. I just that I don't understand. So anyways, that's where we are, right? Consumer sentiment. So GDP is also important. I think that was the last one. So the GDP Q3, estimate was at 2.8. The actual comes in at 3.1. So all that said, the economy is still growing. And that kind of puts us at this kind of like, middle of the road camp. So it's like, I think that's what we're going to get in the very near term for the market indices. But there's this standout right now where the Dow Jones 10, right, has Dow Jones has 10 consecutive lower closes in a row, which was the most since 1979. So if normally I'd be saying, hey, look, it's IWM time right here, right now, to Slim's point, right? And we'll get into this. This is IWM setup for January. And I think this year it may be the Dow's setup also with this nasty 10 consecutive lower closes. Dude, that's pretty brutal. It's pretty brutal. Doesn't mean that the lows are in. I'm not saying that at all. I'm saying, though, that what I can tell is that the Dow is going to be your best value, even almost more so than IWM right now. But yeah, they're probably both perfectly fine. We did have like a half scare Friday, government shutdown averted. It's funny, right? Like, this is the debt ceiling thing. I think everybody knows at this point, like, hey, look, every time they want to do away with the debt ceiling entirely, really. Like, that was what caused our credit decrease. And it's just like, hey, we ran out of spending. ho, man. But yeah, we're always going to increase it. That's just what happens. So that said, consumer sentiment still high, 8-month high. Jobless claims, again, still pretty good. So a strong labor market. We just want to see this PCE cooling, right? And if PCE starts to cool throughout the year, next year, then we could really, then it looks like, hey, look, this 4.5, Fed funds rate is sufficiently restrictive. But I would taper that thought with like, okay, we're not going to go down. We don't need to go to neutral, right? Because inflation's still 3%. The goal is call it 2%. So we'll have to stay here for a while, right? So when you understand that dynamic, this should make a lot more sense to you guys. Just knowing that, hey, look, we're at 4.5, right? Which is a full percent plus higher than the actual inflation rate, which means that we are sufficiently restrictive. And moving forward, we would really want to monitor this consumer expenditures, the PCE, to make sure that, hey, look, is our expenditures coming down? It doesn't mean that retail sales has to come down, but in terms of inflation, it's like, well, we want to see prices generally come down. So, and if we can balance that with a healthy GDP, anything over 2 is actually really good, or okay, right? 3 is like major growth. Then we should be good overall. And it's just a matter of how much of that is priced in at any given time. I think we're nearly priced for perfection coming into that FOMC. Oop. Okay, so this week, guys, we really have like nothing, right? So this week is absolutely a nothing burger in terms of economic data. If you guys don't know, so tomorrow is a half day. We get some auctions. We get a 5-year auction. Oops. Wednesday we're closed. Thursday we do get jobless claims. And then Friday was retail and wholesale inventories plus rig counts, which, guys, honestly, is a nothing burger. In terms of earnings, we'll get to that in a little bit. But yeah, there's literally nothing on the earnings calendar. So I had to pull the monthly earnings calendar, which we'll get to later. So this is what I want to talk about, really. It's the Santa Claus rally and the January effect. So there's this guy, Yale Hirsch, if you don't know, there's this other thing called the Stock Traders Almanac, and that's where you can find this, right? So it's a thing, and it's been a thing for like the last, I think it's like 15 years or something like that. You guys can figure that on your own. But specifically, what it does is the average since 1950, I think, is actually sitting slightly higher. So at the time of the writing, it was 1.5% during a very specific 7-day period, right? So just to be crystal clear, it's 7 days. And what 7 days, I think, is where you are, right? And so those 7 days are December 26th through January 3rd. So it's the last 5 days of the calendar year and the first 2 or 3 trading days. That's it, right? So that's technically the Santa Claus rally. And what it does is it's supposed to set up for the January effect, which is kind of like this rebalancing or reinvesting of those tax losses that were harvested earlier in December. So to that end, I think we're very much at the end of the tax loss harvest selling, if you didn't figure that out. And we may have seen the bulk of it just last week, right? Which we can go through the charts. We will go through the charts. And I'll tell you, I had on SPY, I had 575 as my target, and damn, we got really close within, I think, like a 48 or 36 hour period. It was really close. We got to 577, which may be it, right? So we'll see, right? We'll have to see. So I think here is where we kind of base out today, tomorrow. Probably not an ideal day to trade tomorrow, or really even today. It's a very choppy setup. But the Santa Claus rally starts December 26th officially. And so if you want to be around Thursday is the day that it's going to get kind of interesting to see if those equities that were sold off, do they really start to bounce? And I think this is that setup, and it's through the rest of through really January, all the month of January, and we'll take a look at that. So I guess the reason is why we talked about it. It's January effect is reinvesting of any of the tax loss harvesting. Plus, people get those year-end bonuses. So, I mean, think about, when do you get your year-end bonus, right? If you get your year-end bonus and you automatically throw it into the stock market as part of your like regular dollar cost average strategy, this is usually when that happens, right? Yeah, and now we have +1 settlements, so they have to sell on Thursday. That's funny. So it's a funky dynamic. I will say that this dynamic has been studied for years, and it's decent, but it's not always, right? So like since 1994, that's what I pulled up, right? That was the last, I think that's when it was published. So 23 times the stocks have risen, and the following years have been positive for the S&P when the Santa Claus rally does happen, right? Of the 6 times the stock market fell during the Santa Claus rally, which means, by the way, that it's not all the time. It's like 80%. The stock market fell 4 of the 6 years. So people use this whole setup for the Santa Claus rally, if we get it, for like the entire year of 2025 technical indicator. It's very weird, I'm telling you, but it's something to watch out for, right? So if we do get the rally, it doesn't start today. It doesn't start tomorrow, guys. It starts on Thursday officially. Some things may set up today. I think Bitcoin's at a pretty interesting level. It's literally on the fence of whether it wants to go higher or lower. To me, it's a little sketchy. So it looks choppy for sure. But yeah, so what does this look like, right? So what it looks like, and just so people don't get over their skis, right? It does exist, but this is what it looks like. 1.6% in December net gain. We're already well over that. And then another 1.1% in January. So it's not a major thing, right? But what is major is this thing called the January effect. And to Slim's comment earlier, the IWM is fine. And so where I'm going with this is that where would the January effect really take off? So historically speaking, it takes off in mid to small caps. And so this is the Russell 2000, a major average. And this is it, right? So it's right here. IWM of the indices is definitely down one of the most. So to me, I'm thinking that, today could be a good setup day for IWM, and it could potentially be another good setup day for the diamonds, right? I'm not expecting, because of that, like historical since 1979 downdraft, right? It may not be the most bullish thing for your mega caps, because I will say the mega caps, look, Apple's still 250 something today. Like, there's no real drawdown there, right? Those look pretty steady Eddie. Although we are toying with major significant daily simple moving averages, I think that's a bit of a setup for some chop. I've been looking at this with Snap. I mean, it's so Snap, even Meta, right? Meta had a pretty decent technical setup for me, which played out. If there are things that are headline driven, like Snap or Meta, I think the headlines will prevail and kind of take this stuff off the table. So I would be cautious with things that may get caught in a lot of headline drama. It's probably better. You could trade around those. But in terms of this trend, if you will, it's probably better to stay with things that are not going to fall in like subject to headlines, right? But that said, the numbers support that this is actually IWM setup into next year, and that January, February, up through March kind of push, and then chop really for the rest of the year. So just be really cautious. But the setup is that we are looking at typically the IWM setup, and potentially this year, I'm looking at a heavy value setup in the diamonds. SPY 50-day. Yeah, exactly. Right. So that's what I'm talking about. When I talk about simple moving average, we're talking about the daily 50-day simple moving average on SPY and the 20-day simple moving average on QQQ. So we're very close to those. You want to give it a bit to digest. IWM and DIA are significantly are below those. So from here, I think those become your catch-up trades. And if anybody's in our group, I've been taking it on the chin with HD because I went in a little bit early. But I still think that probably could be a slingshot, right? Like if Home Depot, I mean, geez, that thing, I don't know, 10% from the highs. I was looking for a 5% pop. I got a 10% drop instead. It was brutal. Sorry, I'm laughing. It's not funny, but it's funny. Can't win them all. But like HD, Home Depot, dude, this is like 390s, sub 390s. Can it go lower? Yeah, it can. Right. So we want to just watch, right? I think right now is the setup. It's setting up. It's a good day today. But we need to see some extension. Does it have to happen tomorrow or Thursday? It could just be somewhere in that area. So on to earnings, just so you know. So we are here. I really have nothing for you guys this week or next week. We don't really get earnings. I think this is kind of like the kickoff of earnings season into late January. But it's not even that big of a deal. We won't get really heavy into earnings till like mid-February. That's where we're going to peak out. And I will do some free webinars for you guys on the earnings system. I know you guys were looking for Miss Cleo too. I got to say, she dropped the ball this week, man. I went to go check in with her and you guys wouldn't believe it. This is, look at this. It's so bad. She wants to opt out and take vacation, holiday week, time to take a break. So I'm sorry. There is no Miss Cleo, not publishing a reading, pull a theme card, but that's it. Oh well. So she's taking the next 2 weeks off. That's all I can tell you. Miss Cleo's out for the year. We'll see. Bank of America looks like earnings move. Today? I don't know. So the there's also the setup right into, so if January effect kicks off January 3rd, like right about now, some of these financials do start to report. You might start to see some kind of like pre-earnings moves. But for now, let's do this. Let's take a look at the indices, and I'll show you guys what I'm sitting on and what we're looking at here. And if you guys do have tickers, go ahead and drop them. We'll take a look. So this blue line, by the way, is the 50-day simple moving average. So I always have it locked on the daily interval. This is the 50. These are SMAs. I don't use EMAs. That's right here. We just kind of breached over Friday, bounced over, and just barely holding today. When I said 475 for my downside target on SPY, that's down here for this November NFP low and kind of filling this fair value down to this area. We got close, like really close. And this is the reason really is like, this is that, is this right? This can't be right. Oh, I guess that is right. So on SPY, this is a very sketchy kind of NFP. I don't know why I have that NFP is showing up that high. It can't be right. I gotta update this. Uh-oh. We're about to open this NFP script, but if it's, is this right? Something's got to be off because I had a fib all the way up there also. I don't know what's going on there. Maybe my trading view is off, but I believe we did get to 609. Someone tell me if we did or didn't. But dude, I'll try, but like every time I do the setting, it's a restream thing. They keep going down to 720. Here, maybe this will help. I try, man. I don't know why it's not doing it. But we never really got over the 605 on S&P. And then the Qs is similar, right? So this was the NFP day here for Qs. We did get over, but quickly FOMC brought us right back below. And we're kind of just repricing right here on this NFP low. Over here, I would have had 490 for a downside. But with where we stopped, and you guys will like, this is wild. So this is, first of all, this whole channel is just a basic channel up from the lows. This red line, and I'll take some of this other stuff off for you, lined up here with the 50-day and the prior all-time high. So it had a lot of heavy confluence. My biggest problem with the Qs here is that we're not back over, right? So if we can reclaim 521 on QQQ, then I think definitively we should see that like couple percent Santa Claus rally, which kind of sets us up. If we do have an open over 521.33, we should see 526 quickly that day or the following day. But that's where I would want to close the week over 526 on the Qs to actually think that this is going to happen for right now. Different setup though on SPY. I think SPY, because SPY has a higher weighting between like diamonds and mid caps, I think SPY is a bit better right now. So Qs to me looks like it could kind of like chill for a bit, but I think that we could get closer to that 605, or at least to where we broke down 600s on SPY in the next week or two for this one. But we're kind of in this chop zone. I want to see the market digest this a lot. Oh, okay. Got it. There you go. Adjusted. There it is. There it is. Thank you, Emph. I don't know why I had that adjusted. So we did get to 609. So that was the kind of like that breaking point. Looked like we were going to hold. We never really got a full confirmation. But what we did get, we got 3 closes below that NFP low. And eventually, so 1 close below, 1, 2, 3, and then a full day open and close So 2 full days open and close below, never got through 609. That's going to lock us in for the highs of the year definitively. And so now it's down to really January, right? So between now and then, it's really just about, can we pop up and retrace some of this? So where does this take us? This first Friday bounce was exactly at that 50% retracement of that breakdown. Let's see, right there, right? So if I pull in the after hours from here, swing high to this swing low, we're sitting at 50%. I'd really want to see this comfortably over 594 to say, okay, well, we're probably going to bounce back up and we could probably take this from here. So I'm going to pull 590. That's 594 and change, 594.75. If we can close the week over this, this actually looks pretty constructive for SPY if we can hold this. And your absolute lows, if you want to snipe it, let's say we get a red day somewhere in between now and then. What you do is you take the very last low, after hours low, and then you take the high right before that low. That puts you at 583. I have a lot of confidence here at 583. Just saying, if we do get a red day and we hold right into this 583 area, this is an area actually where I would be pretty interested and in watching to see if the market can kind of stop right around this area. So that's going to line you up with this kind of like cluster of market participants right in here. So 583s, I think if that holds as a low, then I would stay pretty constructive. Does this look like inverse head and shoulders? Yeah, sure. But we're at a pretty interesting point, like from a simple moving average perspective. And I'm not a pattern trader. Those fail way more often than not. So technically speaking, we got to get over that 594.70s. And if we can close over that today, that looks at least good for the half of tomorrow's day. But do we really get through it? I think 598s would be probably where we stop. You're making stop it. We'll see, right? I sold some puts on TLT actually. Said after under 90, I would be open to selling puts, which is for sure a contrarian bet. Most of the analysts on like CNBC or whatever are like, oh no, this is going lower. It's like 84. Maybe, but like, okay, like it's gonna, to me, that would bounce in this area. So I'll just chill on that. And I'm just looking for a bounce into at some point into next year. This is the one that's kind of sketchy, right? So Bitcoin to me needed to hold right here, this low. And so we're sitting this kind of like double bottoming area right here, 94s. I thought this was going to be the lows. Like to me, this needed to have like the lows be in, and it didn't. So we did make a new high off those local lows. And we're sitting now a full retest of this prior character range at 93, but also on the 50-day simple moving average. What I'd say about Bitcoin is like, if we do get a breakdown, it's rough. I'm never going to sell any more Bitcoin though, just so you know, so I don't care. I hope that this bounces, but it's at a very, very critical level. I don't think this actually bounces right now into January. I think we've seen a lot of this movement happen so far. It's been a good run. I'm not bearish on this at all. But if this is, so the thing is, this is definitively going into a holding pattern to me, and we go into a little bit of price discovery, if you will. And that had to be the last higher low. And the problem is now that that's not, this becomes a lower low. And I'm starting to see a lower high. So unless this is a higher low here, then we could continue to kind of bounce. But look, that means that this area here of support, it's got to hold. Like it's got to hold. So it's on the border on the border. If it doesn't hold, then it's like 70s, mid 70s, and maybe even retesting that prior, sorry guys, that prior all-time high way up here, and likely the 200-day simple moving average at that point in time, if it doesn't hold. So I'm not trading for this. The only thing I'm short is MSTR because it's kind of like Ponzi setup. And if this does fail, I've never been long MSTR, but if this does fail, then that one's going to take the shellacking in strength. So I'd rather be short that and long Bitcoin, as call it a pairs trade, if you will. But this is a tough look. Like this has got to happen, because the other problem is like a lower high. Honestly, this could bounce strong, and if the next high is below here, like a real lower high could show up anywhere down here. So it could fake you out. This setup is funky at best, right? Like you could see something like this. Not saying it's going to happen, but I'm saying that this is in a wait and see scenario. Hopefully that helps. So Bitcoin and the crypto space as a whole, a wait and see scenario. The only one I like, and when I do like a 2025 like stocks, like stock picking setup, which I will, would be like a Robinhood, right? Because I like Robinhood forever. I don't have a reason to not like Robinhood. It's down today, but if I do get that 33, 32 kind of area, we got really close the other day, 34s. I want to pick it up. It's going to feel gross probably if we do get it, but I want to pick it up, and it'll probably happen on a crypto sell-off, which would be kind of like uncalled for to me. But this looks for now like it's kind of topping out. So I'd rather go back into accumulation mode on something like a HUD here. It could base, but I think these lows, 34 local lows, hopefully those hold. They don't have to, but I'm not changing my stance on this guy at all. All right, you guys are dropping some tickers, so let me scroll up to the top and see where we are. So MK initially, TSMC. So I'm gonna do maybe one better for you, and that's the semi ETF as a whole. So I've been posting this. I still feel like the SMH ETF is probably like one of the most important things to follow right now. We haven't broken down. That's what's true, right? Support is right in here, right around this 236 on the SMH ETF. Haven't broken out. We are like right in the middle. So this one, I think you stay neutral to bullish. I'd lean a little bit more bullish on that. So that said, we'll take a look at TSMC. Why is it not TSM? Oh, all the way at the highs. Yeah, so this looks good, constructive. I think that semi setup here, that's what I'm looking at, right? So we're looking at a bit of a bounce at the index level, but right back to that center line. If I took this kind of like fixed range profile, it's literally this. We're sitting on that like center line. So I think today, some of these setups on these semiconductor underlines, TSM is probably the most bullish of all of them. So this one I think is perfectly fine. If you want to pull out like a target from this kind of like basic drawdown, I'll just grab an extension here. That's going to take you to 260s, actually, or like 250 first. So, all right, let me clarify. Initially, 230s right in here on that weekly extension, and then potentially, then it's going to chop a little bit. So you're looking at this. You're going to chop for a minute, like this, and then your next extension could take it to 248. Then you pull back and you want to see this hold, and then you could potentially get through this. This is like Q2, early Q2, Q1, late Q1. That's that kind of setup. The daily is exactly that. Just kind of like base and hold right into that one. Wow, that's a big dip, 179, but holding that major support. So this looks good. This looks good. Do I press it? Would I press this bet now? No. Volatility is super high. Intraday, I can see this green line is the average daily range on TSM. So you're likely to be it for today on TSM. And similarly on AMD, right? So right here, that's the average daily range, 125. AMD can extend a daily range, but this one looks bouncy. You're very far at the lows. I can see this one bouncing, but just to like those 130s, you're still hitting this, or maybe even breaches this downtrend line. This area, 119, and you had gotten very close to 110s in the pre-market the other day. Yeah, it was like it was 115, which is literally this low. So this is where I'm at, right? A lot of the downside targets have been hit for a lot of these things. This is 116. A lot of these, and that's almost the 200-week simple moving average. So this is where, okay, people might get pulled up on AMD's technical setup, but it just looks like a bit of a bounce to me because this is probably going to get hit again. And it's just going to make this series to me of lower highs and lower lows until it can kind of balance out, or it might even go sideways for a very long time. But I'm not going to get in the way here. I think the last one was 128. If I just said I'm not going to get in the way, but then I'm looking at this, I'm like, really? Maybe I am. Maybe I am going to get in the way. I don't know. So this was that last breakdown level, 128. Jeez. This is that volume point of control right here, 125. You have a fair value. This is not bullish. This is bouncy. At 127 now. So the old 128 has been brought down to 127. That shows up right here. That's your overhead supply. So let's see where they're selling here. Breakdown, selling. So that's where this comes from. Actually, it might even be a little bit lower. I got a bunch of hate on being bearish AMD. Whatever. 126s. Yeah, I mean, this is kind of like short area. But I'm not gonna take this really, because with Santa Claus rally, all that stuff, I actually would say the better opportunistic short is gonna be up in here if it can bounce through. So if you're long, stay long, just chill. Just know that, hey, look, if this gets rejected in the 127s, it's probably not going to. I don't know what's your profit target on AMD? If you're long AMD, what would your profit target be? I guess that's my bigger question. What are you, 150s? Like, I don't know. That was a tough one for me. Yeah, like if you're long AMD, what would your target be? 145s? 164. Yeah, okay, I can see that right here. That prior all-time high. Yeah, I mean, so if this is the box, I could get with that. As long as you're not going to be like the person that's like, oh, we're going to like 300. You're just looking for a range-bound trade, right? And that's reasonable. I can get with that, right? You're long today, but it's kind of sketchy. I don't think that you want to be short into this unless you fail. So I won't take this short. I took it short for a bit today and I was like, no, I'm missing something. This might be like that prime example of tax loss harvesting, December right? All the way down to here. And then they might have even been able to like reload, right? And so M says one. So some of you guys 132, 136, 164. But I think that we can agree right now that, and I will agree, if it gets over this 128, I think you could be relatively bullish into this 132 area, and then you take it level to level, right? Like I can't do any more than that because the chart's not, it's not good. It's not good. Even if you were looking at this major swing high, if you're saying this is probably local lows and this is new high and the total uptrend is intact, which maybe some very long-term investors are looking at, that means that a higher low in your uptrend could show up as low as 195. Really. So that's where I'd put it, right? Like if I were to really get long, but even then you're still looking at the box, like a box trade. So it's tradable. It's not something I'm super interested in. And I have a hard time with these, to be honest, something that's like in a major downtrend to me. And I have a hard time. Like I'm still like where I would much rather NVIDIA here versus AMD, which by the way, NVIDIA triple bottom. This one, if you're going to stay with the strongest, may have bottomed before the rest, right? So this actually looks good now, better. So much better on NVIDIA, finally, than the rest. And if this does go, right, so your extension here on this most recent would take you into the 170s maybe, but that's like you guys need to buy a lot of time if you're going to trade for this stuff, and you're really going to have some trouble at the 140s, right? So you're nearing that right now. I think this blue line here, this is you're not quite at the 50 day. You're right there. So technically, and this was kind of like that trick, technically I want to get long on the second higher low below a major simple moving average. So my only thing I didn't get long here because this was slightly higher or slightly a lower low. So low, slightly lower low, another slightly lower low. But this is a break of structure from here. So if NVIDIA gets rejected at the 50 and I get a pullback here down in the 130s, I would really like that. And I think that's, here it is. If I get an opportunity, 132. So if these are the local lows, the high right before these lows is 132. So if I get a rejection at the 50 here, and then I get a pullback and retest and hold at 132.50s, I like this. I like this a lot. If we can get that, which means though, this may be a short in the very near term because you're not over this right here. So heading into some trouble areas on NVIDIA, specifically right here. Stay long, be long, but unless you get a short trigger below Fridays. So the short trigger here is going to be below 136, which you don't have. Below 136, you're probably going to get that $4 pullback for probably a really decent buy in the near term. I like this. Yeah, this is a decent area. I like this as a watch, like a major watch now. And that would be retesting all of this. In the meantime, you must watch this area here. This is 141. So even this can breach up to 141 here. Then watch out. So I'm not taking this one here now. it's in the box, but next higher low, that looks actually pretty good. Meta Tesla. I got to scroll up a little bit. You guys are way up here. Victor's asking for Celsius. So I sold my Celsius like fully 131s. I was looking at Celsius having trouble here. I actually sold it before it did that. I literally sold it like on this move. And I was like, nope, I'm done. It needed to get over. If you're in my group, you may have been the ones laughing at me for selling it. But who's laughing now? No, I'm joking. But anyways, this was that crazy, like super critical area, right? Because I sold it and it went higher, right? And because I sold it right here, it bounced right off the 50 and it went higher, but it couldn't hold it, right? So we never got like a full day opening close over that 32 kind of area, and now it's lower. So if we're going to see the January effect come in on Celsius, it's going to be at the end of the year. I'm going to do this the same way. If this is the last low, basically 25s, then what has to be, so for this to be a local low or a swing low, then the low right before this has to hold, and that is 25.77. So it can, this right here becomes kind of like that area that you need to see hold right in here. It's slowing. Look at that. It's slowing, but you don't want to see this going below here or a close below 25s. It's just not going to be fun. That's how this works. But yeah, and it's not in an uptrend until you're over 32. It's just not. And that's why I was like, hey, look, if it breaks over 32 and it like really breaks over, it's going to pull back and eventually I'll get something like this and chop. And that here in this kind of setup, I would be happier even if I sold it and I don't buy it back lower. Like I'd be happier to buy it back higher on something like this, just to know that I'm not catching a falling knife anymore. Because this is the next area on Celsius is kind of low, right? So it's down in here in the 20s and teens. That's what would have me worried, right? So I'm going to stay away from this until it's over its 50 on this guy. That's where I'm at. Intel, I don't know, Intel. So dogs of the Dow. Look at this. I mean, did I speak to you soon? Crazy. So same kind of example, right? So if this was the low, check this out. Then the low right before the low becomes what I refer to as like your price of interest, and this area becomes your support. That's really close. Really close. This Intel setup, though, I would say this is years in, like this could be in the box for a very long time. Yeah, this is God help me. This looks like it might have a little bit of some legs in it. It's got to get, so I'm going to zoom in a little bit more. Tough. It's tough. Sketchy. All right. So $20.50. It's 40 cents away. Right now, it's over this. And you just do it again all over. So if that's the low, then the high right before that last low, the low right before the lowest low is $19.22. So this is your area that you want to see this trend holds. And then now if you're over this, okay, cool. You definitively want to see it holding over this. I don't want to trade it in here. Now you're just into this area, right? So this area becomes up to 67. So these are pennies, man, super small pennies. Here now, this is your overhead supply. That's a toughie. Actually, it's right here. There. Right. So you got like 40 cents left. Tough one. It's a far way away from saying it's out of the it's out of the muck. Yikes, Aroni. Astera Labs. Do you guys know this one? This thing is just on an absolute ripper. So Astera Labs, this chart, you cannot deny that this is like one of the most bullish charts out there. Newer IPO, $54 is the first IPO price. It only went below that for a little while. This is semi. So this is what I would want to see, like broadening or continued strength. This looks good. New all-time highs. Again, man, rarely do you get dips on this guy. It was down to like 119. Very small dips after it came out of this $54 kind of tranche. Yeah, I don't. This is after. Is no lockup issue. That lockup is done. The only thing here is like it's there. I guess 150 to 190s. Really, technically speaking, that's where this goes. And that holding that 125 was critical. So that's what this looks like, man. This is a very good looking chart. Yeah. Well, 150s is what this looks like. It's going to near term, like early Q1. What if we cut, if the two cut, oh yeah, we were talking about that. Let me see. All right, Mr. V wants PayPal. So I really wanted IWM, and this is where I'm torn, right? So I like diamonds. I'm torn on the IWM piece because of what happened. Like the setup was like we needed a reprice for 2 rate cuts, and I'm thinking, is 2 rate cuts, is that really that bullish? Like, is that big of a setup for IWM? That's my issue, right? So PayPal back over under 90, but over the 50-day simple. It looks okay. It looks okay in this, where was it? Right here. In that area. So as long as it's holding these local lows over 84.75, it looks like another kind of retest of that prior area. The only thing is that so when we're in a setup like this, and this is why I'm kind of hesitant, if this doesn't make a new high, here's the thing. So it's like auction market, right? So if this most recent dip isn't enough to breach these highs, then what has to happen is that it needs to go lower to get higher, if that makes sense. So it has to go lower. To go higher, to basically collect more buyers. If this next push doesn't make a new high, then we do have to go lower. So, but certain things like this can play out for a long time. And so like if you're looking at maybe like leaps on PayPal, it's okay, but you need to be aware of if you make a lower high, or if you can't breach these highs at 92s, it does need to come lower to incentivize a new cohort of buyers to come in. And that's going to put you right in this area here into sub 80s, which is rough. But maybe this is enough, right? Maybe this is enough to make it, to push it higher. So you'll see that as long as this area here is kind of holding. So it's constructive. It's not, it's neutral though. It is neutral on PayPal. Workday got in, was it S&P or was it the NASDAQ? Yeah. So, Axon was into the NASDAQ, Axon. It's similar. We're like, this is where I'm kind of cautious, right? Like if you're into the S&P, some of these things are going to be sell the news. These are not small companies, $71 billion market cap. I think that's probably fully priced. I would stay away. Just let this cook. What is this? Oh my God. Do I know this thing? Is a small cap? If I pull this up and it's under like $1 billion, was it robotics? 4 billion. Okay. I don't know this company. Newer IPO. No, 2021. I don't know this company. Robotics. Is this like automation? If it is, what's the other one? Rockwell. RMTI. Some of these companies may be oversold, right? This PRCT, I just don't know enough. It's not horrible market cap. Something happened where it's repricing this. You're basically getting this earnings back. But yeah, I would say in this area, in this general area, it could go a little bit lower. 70s, as close to 70 as you can. And you don't want to see that hold. It's the same kind of exercise. So if this is the low right before the lowest low is 69. So that's why I say as close to 70 as I can. If you want to average in here, that's fine. Oops. I think this is below the 50. It's kind of tough. It's literally right here. So you could take a starter here, but be ready to cut that quickly if this low 78, or if you're long term, just have more available to buy closer to 70. You saw an edge. It's not confirmed to anything here. All right, Microsoft, and then Square. So I'm hesitant on Square, by the way, just because the crypto setup. I want to see it hold. I did sell my Square, and I was very sad about it, you guys. I did. I sold the Square, and I was sad. But I might get back into it later. We'll see. Microsoft, yeah, this is right in the middle, man. Is interesting, but I don't want to take this here. So I stay long for sure. This looks like right into the box. So like I'd rather see like a basing kind of setup like this, which would be not this week. What is this? So this here, you're going to chop with this group right here. I mean, it kind of tagged it. I don't have a breaker structure though. So we got like a double top. This is what I mean, double top. So if this is the high from Thursday, Friday is basically a double top Friday, which if I kind of like extrapolate this, it's a lower high here. So if this is a higher low, it definitely still puts this in chop, right? So even if this is a higher low, let's say it goes there, you're probably going to get here, and then you're probably going to come down, and it's going to be a while. So it's not a setup for me this week or next necessarily. So Square is like this 94 area. So it lost this. I just ripped it off this day. Will I get back into it? Yeah, sure. But it's the same kind of thing as PayPal, where it's like, okay, If you're long in here, stay long. This is just like a basic pullback to me. If this is the last lows, cool. This is not bad. Square is not bad. I might buy this back. The thing about Square for me is that it wasn't like oh my God, this is like the best idea I have, right? It's a small bounce play. Well, it's like a 40% bounce play. It has to get over 90 again. I bought this in the 80s right here. I think I bought this. So from an options perspective, I didn't want to sit in that drawdown, which is why I definitely nixed it. And then equity, it was just so close. I was like, I can come back later. So from here, I mean, this looks, again, it looks constructive, but I need to see them a little bit higher. And I'll be happy to buy this even more expensive. I don't need to snipe the lows on this guy. Rocket Lab. So this one I got worried about, but I shouldn't have. This is so dumb. I had 2130. It was a day like I'm like, I got to clean up the port. I was raising a bunch of cash. I should have bought the crap out of Rocket Lab because I bought it just earlier at like 2250. I was too quick on the trigger. And I saw it below that and I was like, it's not going to hold. But I didn't think about it for a second. I was like, 2130, that's exactly what I was looking for. Damn it. I was looking for 2130 and that's what it gave me. I just wasn't in the right frame of mind because everything else was falling. That was a buy. So I'll buy back Rocket Lab for sure. Next opportunity I get, either higher or if it's making new highs, it's going. I might just like dollar cost average into this guy. Back into this guy. This could be a good pick for next year too. But right in here, anything in here, anything 23s, as close to 23s as you can. That's good. What a loser. A panic sell on this. Booked it 2250. That's where I was buying, but I really wanted that 2130. I got it, and I was just like not in the right frame of mind. So congrats if you were, but that's a good one to me. Meta, Tesla, and then you guys, I think I'm going to finish up pretty soon. So Meta, choppy, but decent. So this 580 was that recent lows. Choppy for sure, because this morning it was looking, it looked primed and then wicked and then pull back. Now you're at new highs for the day, but right into that kind of breakdown area too. So these look constructive. So I don't hate Meta at all. My trade setup on Meta was what? It was this kind of like broadening formation lows coming out of it, which means that this was going to be kind of like the highs area, which we got right into, tagged it, didn't extend. This is a rough setup. And the reason I'm not like, I got to get this is because this setup, it was choppy down here, but that was my best opportunity. Sometimes when they fail, they do go like fully down, right? But so far, it's not, because this is still price discovery. What you need to see is you hold this kind of like center line, which is exactly what this is doing. So this looks good. This looks constructive as long as you're over 580s. So Meta over 580s, stay long. Equity, and then options wise, I need to get over this kind of hump right here. So we're just barely holding this. It's interesting, but short week, I don't need to press anything. I'm more in the day trade mode right now. We're like, hey, look, all of this stuff could just be day trade setup, and I'm not thinking a whole lot of swing stuff from an options perspective. This looks like to 609, and then exit stage left on the options trade. So that makes it very short term. Tesla, I think, holds up the best. I took some pretty quick calls and then closed earlier today. This is okay. It's just okay. It's held up the best for sure. We had a gap down today, meaning, so here's the gap. So we had a session gap or gap, up. So session gap was here today, 423. This 420 level is like kind of interesting now, right? So I think this starts to base. Tesla became like unintentionally like one of my largest holdings because it hadn't really fallen very much, and I trimmed a little some of the others. So Tesla looks encouraging for sure, as long as it's over 430. Now I think your dip buys are the sub 420, but it's got to hold this level, right? So it was same thing. These are your local lows. The high before the last low was 420.70. I took it as a bounce off of that. So now 426 needs to hold if you're going to hold this trajectory. So I'm sorry, 427. So now 427 needs to hold from here. So it could be choppy. Doesn't need to go up all the way. A lot of overhead supply on this. This looks more consolidative than a breakout for sure. Vista, VST, the energy. So I took an ad on GEV just because I sold my GE and I added GEV instead. From an energy play, I have Quanta, PWR, and GEV. So I actually reallocated some of my GE equity to GE Vernova because on the split off, I didn't get that many shares. I was like, this thing has been doing really well. So I kind of like that. And I'm not super familiar with Vista. But I think this becomes like, it stays kind of like a theme for the foreseeable future. So this is a decent area. You could pull back a little bit more. But again, a lot of these charts are kind of more in consolidation and like digestion than breakout where we were before. That said, though, this is where it would need to go. So you get a good green day tomorrow on Vista. Not bad. Not bad at all. You just need a little bit higher. Just a teeny tiny bit. And this is going to look good. You want to hold today's pre-market lows, though, because that kind of retest here is good. Just because it's out of the downtrend, though, it doesn't mean it's going to go back up either. Sometimes these charts just like, chop and then go. Is they might end up like they do this sometimes. Be very careful. All this stuff is like, that's why I don't really fly with patterns. Snow, though, man. Nope. Can't do it. I have no interest in snow, man. None. Zip zero. Nada. I'd almost rather volunteer over snow now. Is that crazy? Big earnings gap. Nothing changed for me on that call, like at all. I know the product's good, but it's not about that for me. So half of this earnings pop is 155. Kind of like golden pocket is to 145. So it's here for me. I don't know. It's not an uptrend. That was my problem, was even if snow got like all the way to 200, it could just be a higher low setting up for a short, which in fact it kind of was right in here. So this was the problem. This is your overhead supply. Any like major bag holders are here. Yeah, it's going sideways. You have a very long-term view on this. Guys, it's not the best look. It doesn't have Momo. So even if it gets there, I don't know that it's just going to bounce. Upstart. Upstart and Affirm. I mean, so both of these, it's like could have been, should have been. Yeah, this looks like a bit of a problem to me. So Upstart, you could probably take your shot here. But if this area fails to hold, it's got to come back. Again, it's the same thing. It's got to come back even lower to incentivize more buyers, because whoever the buyers were up here, they couldn't get it through that $85 level in strength. So if the current investing base is not enough to get through 85, it needs to pull back deeper, which would be in the 50s. But it's not a breakdown either. So it's kind of like chill. Maybe it's a wick down. This is, you gotta think about it. Like the Fed is, we're looking for less consumer spending to slowly lower inflation. So it's like it kind of puts Affirm and Upstart in similar positions where I think these trades get put on hold for a bit, and they could take a stronger breather than you might want. This is really nearly that level, but again, they're not full blown breakdowns. It's kind of like if these lows from this morning don't hold, or Friday, these are the ones that could take a bit stronger of a beating. I wouldn't short them though. I'm not short these right now. It doesn't look like a long for sure. Something's setting up. Something's definitely setting up. Netflix, dude. Okay, Edward, I like this. So Netflix, December 26th, Squid Games 2. Look, if I want to, if I want to take my, I'm so over time here. If I want to take my Santa rally shot, this is definitely one of the names. I like this. I'm lame though, right? Like I've liked this for a long time. I like it. Maybe I'm crazy. I like it a lot. I don't know. Squid Games 2, December 26th. Who's gonna binge watch that with me and Amit? I don't know. Speaking of Amit, am I on? Oh. Okay. Amit just DM'd me. So we're off tomorrow for Technical Tuesday. So today, let's call it here. And then today, after hours, we will do, after the market close, we will do another show on Amit's, and we'll catch up on some of this stuff. Is that good? Yeah. Buddy the Elf, gift to the people. Buddy the Elf, gift to the people. I like it. I just said that to him. All right. Appreciate you guys. Okay. Count it as Technical Tuesday on Monday. Yes. So Technical Tuesday on Monday today. We are on. So I'll close it. Jill, I know you'll be there. I'll hit this over there for you guys. I don't like CleanSpark though. Just saying. And I appreciate all you guys over there, right? And I'll convince him, Mike, to look at Rivian for sure. And VST, yeah, we looked at this. That's a really interesting. Did you really? You did too? Oh God, this is so bad. I just Lunar. Look, I raised so much cash though, so I'm juiced, ready to deploy heavily. I want to take it slow, right? Yeah, I'm with you on Rocket Lab, dude. So like, I want to take it slow, slowly deploy. Look, Amazon definitely top 2025. It cannot not be. But all right, guys, that's it for now. I appreciate everybody hanging in, right? We went a little bit over. Join me today at the market close on Amit's show. Somebody please drop his thing in the chat. It's Amit is investing or something like that. I can't believe I don't remember. Amit show. I'll drop it today at the market close. Hop in there. Holiday promos. Yes. Right. So we will do something. We have something. So number one, we have annual pass going on. If you guys want that, I think it's like $1,500, which is like $120 a month. Our price per month is going to be $200 a month for 2025. So that's nearly half off if you want to do that. But the biggest one is the mastermind stuff. So if you were part of the last mastermind, I'll just say check your emails because there's a stupid deal on that. We're going to open up for the first time really ever. It's just because every mastermind is going to be different. I know I got a lot of emails to catch up on, a lot of questions about will each quarter of the School of Games be different? Yes, right. There's always going to be core classes. So some core classes will stay like our day trading system. We're always going to have a refresher on that. But you'll notice that there's a lot of stuff that we didn't go through. Like we didn't have a lot of time to do swing trading. Obviously going to be a focus. We didn't do a ton of advanced options. Going to be a focus, right? We didn't do spreads at all, right? Debit spreads, like advanced options. That's going to be in there. So there's always a very core group of things that you will always need refreshers on and that are always core to all trading aspects. So that's going to be there. I may do things like I may pull NFP out and do a free webinar. I'm thinking about doing a free webinar on NFP training. Since we will be releasing that script with Lux, I believe this week, hopefully towards the end of the week. I have no idea what they're going to price it at, but Lux Algo is going to be releasing that indicator soon. And so I'll do a free training on it and how to use it and how that whole thing works. But if you were in the last mastermind, or if you're thinking about coming into the next masterminds, like, look, we have an annual pass that's crazy. If you want to do up front, I think it's like 30% off if you've never attended. But look at it this way: for our returning students, they get even bigger discounts. Returning students get even the server for like $75 a month, which is totally cheap. It's dirt cheap because our focus is training, right? Our focus is teaching you guys how to do what I'm doing, not so that you don't have to ask me about a million charts every week. It's cool. It's fun. I love hanging out with you guys, but I'd rather teach you how to do this. So we're going to have a lot more guests. We have the #1 futures trader confirmed coming next mastermind. And every quarter, man, it's going to get bigger and better. And eventually we're going to turn this into an in-person event, and we will be booking Vegas, boys and girls. But that's the plan, right? So we got to keep growing. Every quarter will be different, but again, there will be refreshers no matter what, because you need the reminder, as do I, as do we all. So yeah, but until then, check it out. Ping me at Jason@PaperGains. Jason@papergains.com is the email. And then go on my Twitter. There's a pinned message and subscribe to the newsletter. That's where you're going to get a lot of the updates. So it's pinned tweet on my Twitter feed. Scroll down through that thread and there's a newsletter. It's free to join. That's where you're going to get all those promo infos. But until then, guys, I will see you this afternoon. Adios.